Good afternoon, traders. This is Christian from Tribeca Trade Group, and it is Wednesday, April 28th, and this is your end of day recap. And so, a couple themes to kind of get out of the way for the day. FOMC, we'll talk about that for a minute, and a lot of earnings reports, a lot of chop back and forth. You will probably hear me say in this video, chop as many times as Powell says transitory. So, but it is what it is. That's kind of the theme of what we're seeing, and quite normal, I think, during earnings season. Especially when you have over 30% of the S&P reporting in a week. It's a lot of interpreting and understanding all the data that's coming out. Risk disclaimer in front of you: everything that we're going through is for information purposes only, not giving out any advice, recommendations. If the video is blurry, YouTube has not finished rendering it, so just give it a little bit more time. So where did the indices finish today? I chuckle because it looks like the S&P point is that 0.01. I don't know. I see on one screen I have minus 0.03, and then and my Bloomberg. Maybe it's the day change. That's why. But yeah, I think just slightly down for the day. The Qs just seem like they were a little bit more edgy. A little bit. They seemed like every time there was something, Powell said something bad or something, they would kind of move a little bit more. They finished down 30 basis points. IWM finished up 0.25%. So, again, the lesson I think from these Fed days is that they're really, really whippy. They move back and forth, but sometimes we kind of pick a direction and go. And then other times we just have this, right? This was at 2 o'clock, or this was actually at 2:30. Right? I think there was a statement. There's a couple statements that move the market. And again, this is really small stuff, right? We're looking at a 5-minute bar and, really tight ranges. But the Fed said something like they're not thinking about tapering right now. That caused the market to kind of go up a little bit. And then there was a question about Dogecoin from a reporter, and Powell then said that there is some froth in some areas of the equity market, so that brought us back down. But but all in all, it doesn't really sound like there's much change from what we've already heard from the previous Powell statements as well as meetings. So it's kind of business as usual until we get some other guidance. And this stuff is important, because the you want to, the old saying is don't fight the Fed and stay with what the Fed is doing. And until they really start to tighten, I think we just kind of continue as business as usual. But that whenever Powell does speak, the market gets very anxious and, really kind of moves back and forth. But overall, I had said this to somebody this morning, and I said today would be a better day to go play golf. And I really believe that. It's just very whippy. Unless you're an expert scalper, and just picking up, dimes and nickels here and there, because we just didn't see a lot of things that were trending. We saw a lot of option activity. I don't really get it, to be honest. I don't understand that. There's crazy option activity all through from 2 o'clock to all the way till 3:30, when that captures, the Fed announcement and the press conference. I just don't get why people would be throwing away money on things on short-term options back and forth. It makes no sense to me. Who does this? Who really puts out a lot of money on an option trade that expires either this week or that week? And and that's why I think 90% of options expire worthless. So, but it's just crazy. The amount of options on the tape, and I think more mature traders just sit back and kind of listen and not go crazy trying to capture every single movement. But again, it's amazing to me how much premium gets thrown around back and forth on days like this when we really don't go anywhere. Remember, unless these people are selling options, which there's a lot of options where they're not selling. When the markets flatline and really don't go anywhere, like the S&P is doing right now, it's extremely difficult to make any money in options. If you're long stock or even short stock on days like this, it's kind of a non-event for you. But options are going to give back all that, give back all the premium. Now, again, we're looking at the S&P, right? And we're looking at the 1 hour, which again, we really haven't gone anywhere this week. We didn't go anywhere last week. We had big back and forth movement last week, but so far this week, I mean, the price action is really, really tight. So, I think that's fine. We'll see what we get. I think the next thing that you have to get through is you got some more earnings reports tomorrow, and then you got end of month. So what are funds going to be doing end of month? Typically, the last few months, I feel like I've said this now 10 times, but we see some selling at the end of the month, and then we see some buying in the beginning of the month. Does that plan out or shake out the way that it has? I don't know, and we'll have to kind of say. But that's the side that I always. That's the side that I always basically stand with, is that I go with what the pattern usually is in the market, So I said this morning, I said yesterday, I don't see a lot of edge in doing a lot of trading around the Fed day, and as well as all these earnings reports. We can go through a couple of them. Facebook, right, is up to 324. Really a great report. And they're looking pretty good. Apple is up to 137. So again, big numbers from Apple. I mean, the amount of money that Apple is generating is just crazy. I mean, where's the, that's the buyback, but 89 billion versus 70. I mean, just the numbers, right? And I would assume Amazon puts up a big number too. But people now have in their head that Amazon may split, which is complete rumor and speculation. And if you have to, regardless of what the number is, if Amazon doesn't announce a stock split, it might actually go down a little bit, because people have built the expectations up for Amazon, that they're going to have a stock split. So I probably will not be playing Amazon for that reason, because it's already moved on this. Now, if they happen to announce a stock split, the market is about psychology, and for some reason, investors like that. Even though you could buy Amazon fractional shares wherever you like, there's multiple platforms where you can go and you can buy fractional shares. So you didn't used to be able to do that if you couldn't afford a share of Amazon. I really don't understand the draw to that. Think about it, right? What is the draw of Apple splitting their share? Sorry, not Apple, of Amazon splitting their shares. I get it. Maybe you could trade the options a little bit more. It makes it a little bit more ease for trading. But that's it. Like, I don't really understand why it's that big of an issue when you can go to, I think, Schwab has many programs. I trade with this. I use this program called M1 Finance. You could buy fractional shares there if you like. I use that for portfolio trading, that system. But I think Schwab and every other system. So I don't really understand the need to split the stock, but I know that there's a lot of people that are rooting for that, even though it makes absolutely no economic sense. But that's a whole nother, right? All you're doing, you have the same pizza pie, right? You're just slicing the pizza pie in different slices, right? But all in all, it's the same pizza pie, right? That's what a stock split is. If you don't know what a stock split is, Google it. But there still is a psychological thing, right? Just like when Tesla did their stock split, the stock rallied. So, but nevertheless, I'll leave this topic here. But you could see, it has gone from 3,375 up to 3,484 on the belief or on the hope. Usually so again, if they don't announce a split tomorrow, I don't think that's going to be perceived very well by the stock price, because people have built it up by throwing these rumors out on Twitter. So we'll see what happens. We'll see. And I'm a long-term Amazon holder. I have it in my the TTG Trend Portfolio, and I also own a little shares in my IRA right now. So I've been a long-term holder for Amazon for a while, and I'm not looking for a stock split. That's not the reason why I own it. All right. So we talked about the S&P. I didn't go over the performance. So again, just kind of talking about some other things tonight because there was a lot of chop. I told you if you hear me say that word again. But look at the energy names, right? This was something that we went long at the end of the day. It looked pretty good. There was also a lot of call activity. I would really, for the first half of the day, we did see decent call buying in a. Yesterday it was mostly in the ETFs, but we saw things like Valero, we saw things like I think it was NOV that saw a call buyer, but literally, um, you know, about five different energy companies all saw call buying. So I don't, I still don't see a breakout for oil yet, right? Which is at the top of value, right? So that level is going to be, right around 64. But there is an awful lot of positioning going on. And, I took off, if you look at how I traded this, energy is not a place where I really stay that long in a trade for. So I started taking targets off of my 78, 76 cost basis from yesterday. And, I'm out of 70% of the position. Right. So now the whole thing is it's trade management. Right. So we'll see if this thing wants to continue to kind of gravitate maybe up towards the top of value. And that's where I'll look to kind of take my last portion of the position off. And I'll keep a trailing stop in case this thing reverts back. Right. There's another VPOC up here at 87, which also might be where I take off that last third of the position. XLE, which we know has a big portion of Exxon and Chevron in it, right? Also looks pretty constructive here. But I tell you, the other thing that makes it particularly hard this week is, there's so many names that see option activity that they have earnings in 2 days, in 1 or 2 days. So it's really noisy. With that option flow, which I discussed in yesterday's video. But Lending Club was one name that saw, by the way, nice looking chart here now that it did kind of curl back over. But, this was a name where they were hammering calls right around this area. And we talked about this in the trading room, how, even if you didn't want to do much today, you got an opportunity to kind of scalp something like this. They started buying, I think it was next week calls in Lending Club. Let's see what they were here. No, there's not weeklies. So they were the May calls. They started buying the 17 strike calls at like 60 cents, and they went up all the way to $1. Right, so something like that. You could day trade on days like this where you didn't want to put a lot of exposure on. I started to kind of, I was doing a little bit more trading in the beginning of the day, and I just realized to kind of cool it as we got through the morning. I like the strength going on in the payment space, right? So AXP had a nice day. Capital One had a nice day. So a lot of these payment companies, did Visa give back some of the gains? Visa gave back a little bit of the gains, still up 1.5%. MasterCard reports tomorrow. And in this iPay ETF, the biggest weights are Square and PayPal, each about 5%. But I figured I'll just go long this iPay ETF rather than pick a particular name, as the whole group looks pretty good. So I might hold this all the way until PayPal and Square report, which is the middle of next week. So I think this is a great way to kind of own a piece. I also like this Ralph Lauren. I made a little joke on Twitter about, I'm not a fashion a fashion expert, but I know what the price is telling me, right? It seems like people are wearing more jeans now, I guess, right? Or girls wearing more jeans. So Levi's has done really well. I think Ralph Lauren could continue to break out here. Now it did gap up on a Cohen upgrade, but this was a chart that a fellow Tribeca Trade Group member pointed out to me yesterday, and I didn't buy it yesterday, but I bought a little bit on the gap, and we'll see how that goes. A little bit of a chase for me, but I still think that's, if I had to guess about fashions, looks pretty good. And then if you look at what goes with jeans, tapestry, handbags, tapestry's looking good. I know it's my little joke here, but I try to be light with stuff. Capri Holdings, did take out another Virgin point of control, kind of came back in on that. Right, Virgin point of control, where the most volume occurred in a given period. Right, so this is from here. I'll put on the value area, the market profile. Where is this? Whoops. Where is this? Here it is. Show profile. Right, in case you're not familiar with the profile, so it's from this. Right, so we took out that. All right, so that's a couple things, and what else did I trade for the day? Zscaler. I actually took off Zscaler. I just got a little chicken. I think the chart looks fine. I think maybe I don't like putting on a lot of trades going into the end of the month. So I will revisit this probably on Monday, right, or even at the end of the day on Friday. We'll see, but I like the setup here. It's above all the short-term moving averages. It just didn't have much of any momentum to it today. All right, I keep getting questions about this Unity software. It's still not there yet. I know everybody likes this stuff, but I have to see this VPOC being taken out. So I will be a tad late once I get involved in this name, if I do get involved in it. Right? It's got a 106.40 VPOC. I've gone over this name a couple times, but I know everybody likes it. Right? Because Kathy Wood's in it. Then what else? I think there's some lessons to learn about some of the earnings reports from yesterday. Pins. I heard a lot of people on Twitter yesterday. I think Twitter is really good for some things, right? For following some people that you can kind of learn their system from, that share a lot of information. They share their charts. But I'll tell you, I heard people yesterday talk about pins on Twitter saying, reading the earnings report and saying, "Oh yeah, I'm okay with all that." You know what I wouldn't be okay with? The stock price. And really, price is king. And if you're more of a technical trader, price is telling you something for this name, right? Now maybe it comes back, maybe it rallies back a little bit, but you can see, I made this comment in the trading room earlier this morning, but look at what happened when this thing fell back. This was, I think and I could be wrong. If I'm wrong, that's fine. But I believe some broker like Cleveland Research came out with a negative rating on pins a couple weeks ago, and look at what it did, right? Strong companies, in my opinion, don't do that, right? Imagine if it was downgraded by like a Morgan Stanley or Goldman, right? What happens on strong companies when they get downgraded is they start the day lower and they come back in, buyers come back in. So you have to ask yourself on this day, right, when it got downgraded by Cleveland Research, that nobody came in and bought the dip, right? In terms of institutions, a bunch of retail traders did all over Twitter. They were buying the dip, but really it's the institutions, right, that need to prop up this, to need to kind of come in and buy the dip. And that didn't happen in Pinterest. So I think there's better places to go for your money. I think so. The bad part of Twitter is that there's other people with a lot of followers who sound really confident and say, "I'm buying the dip," right? And then they give faith and kind of false hope to younger traders who don't know any better, because they're like, so and so has 100,000 followers, he must know or she must know. You got to make your own judgments on these things, and you could see that this is not a good look. Now it's hanging down to bottom of value, but what do you think? Since it had this report, do you think it's going to go right back up? It may take another earnings report to get this thing to go, which is in 3 months. So you're going to hold on to this thing that's probably going to go sideways for another 3 months, or even probably goes back and forth and back and forth. Now, the flip side of this is if you're a really long-term investor and if you like the company, you like the website, you like their business, and you want to keep something like this in your long-term account, not your trading account, then so be it. But I'll tell you, price action, again, price and trend are king to me. But I thought this really gave a tell, on this particular day when some small broker downgraded it and this thing got pummeled. So anyway, that's my 2 cents on that. I'm sorry if you don't like that. Some people I know are very passionate about this stuff. You could go on Twitter and see all these people talking about Pinterest and how it's the greatest thing ever. Sorry. What else performed today? We talked about oil and gas names and really just a lot of material names. So we'll kind of see. I think, really when we kind of come out of a Fed meeting and all these earnings reports, I think letting the market breathe a little bit and see where that momentum wants to come back into the market. See what areas are going to really outperform, right? And also if we do get a little bit of a dip, what gets bought, right? And so that's a big thing. It's something that you really learn with experience, just to be patient, right? And know when you don't have edge in this market. Right, unless you have a crystal ball and know how these names are going to report ahead of time. All right, guys, that's it for today's video. Have a great night, and I'll see you tomorrow.